Is your bank or credit union active on social media? If so, the law requires you to maintain a social media risk management program. And through this video, I'm going to show you how. Hi, I'm social media attorney Ethan Wall. I've helped banks and credit unions maximize social media while minimizing legal risks for over 10 years. At the Social Media Law Firm, we've helped financial institutions just like yours be social and safe, and I'm happy to help you too. Through this course, we're going to cover three things. First, the common social media risks that banks and credit unions just like yours face on a daily basis. Second, what the law requires in order for you to maintain an active social media presence. And third, how to develop a social media risk management program for your financial institution. What are we waiting for? Let's dive in. There are three main types of risks that banks and credit unions experience on social media. First, advertising risks through your bank's official channels. Second, reputational risks through your employees' personal social media use. And third, compliance risks through your employees using their personal channels to conduct bank business. I'm going to start this course off by showing you examples of how your financial institution could experience serious legal risks in each of these three circumstances. And then I'm going to show you how to manage that risk through a social media risk management program. Let's begin by talking about advertising risk through your official bank channels. Your bank's social media is governed by the same regulations and laws as all of your other advertising. This means that every post, story, ad, or interaction is governed by regulations such as fair lending laws, truth in savings, truth in lending, the Fair Housing Act, the Equal Credit Opportunity Act, the Community Reinvestment Act, and many, many more. And your bank can violate these laws in a number of ways, such as not including the appropriate disclaimers or disclosures on your posts, not including an up-to-date or accurate hyperlink to the appropriate terms and conditions, or advertising or boosting your content in a way that unlawfully discriminates against certain types of people. Your financial institution can also get into serious trouble with regulators if you don't actively monitor and respond to questions and complaints, preserve your social media content on a regular basis, and monitor your employees' social media use. Failure to follow these laws and guidelines can result in compliance, operational, and legal risks, including but not limited to regulator scrutiny. So it's important to have guidelines, controls, and procedures in place to make sure that your official bank channels are always staying above board. Next, let's talk about reputational risks that can arise from your employees' personal social media use. You see, what your employees say and do on social media can be used against you. Employees often post insensitive, rude, or sometimes downright hurtful commentary online, especially in today's politically charged day and age. These comments usually occur away from work time and not during work hours, but your employees list that they work for your bank or your credit union on their social media profiles. And this usually leads to a series of complaints to your financial institution based upon what your employees are saying and doing online. And it affects your reputation in a negative way. But taking action against your employees can be tricky. You see, employees do have a legal right to communicate about work and their working conditions even on social media. And firing somebody for what they say on their personal social media profiles could, in certain circumstances, create employment law-related risks. So, maintaining adequate, up-to-date, and lawful social media policies and training your employees on your internal social media policies is not only recommended, it's required under the law. Third, let's talk about compliance risks that can arise from your employees' personal social media use for bank business. You see, there's a growing trend over the last number of years for bank employees to use their personal social media profiles to conduct bank or credit union business. The most classic example of this is residential or commercial loan officers. They typically use their LinkedIn profiles to connect with leads, share their expertise in the industry, and drum up new business for your bank or credit union. Some loan officers or employees are even using messaging devices like WhatsApp to communicate about loans, rates, terms, etc. etc., and these may not be monitored or controlled by your bank. This could create a huge level of risk for your financial institution because the same laws and regulations that apply to your official bank channels are also going to apply to employees who are using their own personal devices to conduct bank or credit union business. So you have a responsibility not only to actively monitor these employees' social media use, but to have appropriate and responsible guidelines, procedures, and training in place to make sure that you mitigate these potentially massive compliance risks for these very important employees and their online activities. As you can see, there are many dangerous risks that banks and credit unions face when they use social media, or more particularly when your employees are active on social media. This is exactly why the federal government has created strict legal requirements for banks and credit unions who have an active social media presence, so they can protect not only the bank, but also consumers themselves. In this next section, we're going to talk about the specific legal requirements that will apply to your financial institution to be able to be active on social media. Let's talk about the legal requirements for banks and credit unions who are on social media. A few years ago, the Federal Financial Institution Examination Council released its Social Media Guidance Memorandum. In this memorandum, the FFIEC confirmed that a wide array of laws and regulations that apply to other types of bank use and bank advertising also applies to social media, and it put banks and credit unions on notice that non-compliance wouldn't be tolerated. But there were two major problems with the FFIEC Social Media Guidance Memorandum. First, the Social Media Guidance Memorandum was supposed to provide a clear and concise summary of how existing laws and regulations apply to these social media technologies. But it didn't. It reads much more like a complicated treatise or a textbook. I mean, this thing is more than 20 pages long. I think it's longer than the Declaration of Independence, the Constitution, and all the amendments put together. So the memorandum, while it's designed to be helpful, really was a giant comprehensive document that sometimes left more questions than answers. And this leads me to the second problem with the memorandum, and that is it confirms that certain laws apply to your social media use, but it doesn't explain how you can comply with these laws when using social media. And really, compliance can be complicated because certain regulations govern what you can or can't say, while other regulations govern what you must or must not do on social media. So it leaves us with a little bit of confusion. But there is one thing that's very clear from the FFIEC social media guidance, and that is every financial institution, big or small, must have a social media risk management program that includes 7 different components. First, your financial institution needs to maintain clear roles and responsibilities as it relates to social media. Second, you must have appropriate social media policies, procedures, and guidelines. Third, you must maintain social media training at your financial institution. Fourth, you need to be able to monitor for third-party social media-related risk. Fifth, you must have oversight and monitoring procedures to be aware of risks that occur online. Six, you need to preserve your social media content on a reasonable basis. And 7, you need to have senior management oversight to make sure that your social media is accomplishing the goals of your financial institution and that appropriate risks and controls are in place. In the next part of this program, I'm going to break down each of the 7 aspects of a required social media risk management program so you could see exactly what you need to help guard against social media risks and maintain a compliant social media risk management program at your financial institution. In just a moment, I'm going to break down what is required under each of those 7 aspects of a social media risk management program. But to help you put this in context, allow me to explain how our law firm starts the social media risk management program with each of our bank or credit union clients. The first thing that we do is schedule a kickoff call with all the members of the social media team. This is because the FFIEC requires that the social media governance team from your financial institution come from all different departments, whether it's marketing, compliance, HR, and legal. So we invite all stakeholders that relate to social media to join a kickoff call to cover the following things. First, during the call, each social media stakeholder from your financial institution would introduce themselves, explain their role as it relates to managing social media at your financial institution, raises their key area of concerns that they have from their department, and then ask any and all questions that they have. From there, my colleagues and I would explain how the social media risk management process is put together, usually over a 3 or 6 month period of time in order to put a fully compliant program in place. Best of all, your social media activities can continue while the social media risk management program is being put together in a way that matches each of your key stakeholders' concerns and primary areas of need for the risk management program. The next step in the process is that we collect all of your existing social media policies, guidelines, procedures, and training programs. This helps us to understand what your current level of risk is and to prioritize what needs to be updated or put in place. From there, we create a roadmap over the next 3 to 6 months of the different deliverables that we will create in order to update or put a fully compliant social media risk management program in place on a monthly basis. In this way, we could tackle the highest priorities first and then tackle some of the medium and lower priorities later on. Then, each month, our firm will create or implement all of the various aspects of the social media risk management program that's set forth in the roadmap that matches your priorities and what the law requires. We also have monthly status update calls each month to ensure that you fully understand each deliverable and to make the revisions as necessary. We can also pivot directions to be able to match what you need. And we're always available to respond to phone calls and emails during the course of the social media risk management process so that you always have answers to your questions and have peace of mind. So that's an overview of how the process works. But now let's break down those 7 different aspects of the social media risk management program so you know exactly what you need to build one at your financial institution. The first part of the program is to have clear roles and responsibilities as it relates to social media. In other words, regulators want to be able to know who manages each part of the social media process and what their specific responsibilities are. Because regulators want this to be a clear and easy way to know the roles and responsibilities, we typically create an easy to follow organizational flow chart that shows who's responsible for what areas of the social media process, and it allows us to make easy updates as team members might change, become promoted, or are added to the team. The second part of a social media risk management program is to maintain social media policies, procedures, and guidelines. And this is by far the most comprehensive part of any social media risk management program. Now, the law doesn't say exactly what policies you need to have, but it does say that your policies, procedures, and guidelines need to match the specific types of social media activities that your financial institution puts forth. So, for example, if your financial institution is incredibly active on social media, it's running ads, it's doing online giveaways, and it has, let's say, a marketing department of 5 or 6 people, you may likely need more guidelines, policies, and procedures to cover those activities than, let's say, a financial institution with a marketing department of 1 that doesn't run paid advertising and only posts about community engagement. In that instance, social media policies and procedures are still needed, but the breadth and scope of those policies, guidelines, and procedures are likely smaller. I'm now going to walk through some of the most common social media policies, procedures, and guidelines that should be a part of your financial institution's social media risk management program. And to help guide you, remember those 3 main areas of risk that we talked about earlier in the program? The advertising risks from your official channels, the reputational risks from your employees' social media use, and the compliance risks from employees who use their personal devices for bank or credit union business. I'm going to break down the key types of policies and procedures for each of those risks type, starting with the policies, procedures, and guidelines that you should have in place to cover your advertising risks from your official bank or credit union social media channels. The first deliverable that every financial institution should have are social media marketing compliance checklists. This means that when you create social media content, you need to know what disclosures or disclaimers to use in order to comply with the law. Plus, it's helpful to know when, where, and how to use those disclaimers so that the marketing department and the compliance department can get on the same page as to how to create social media content in a lawful and compliant way. This is typically a comprehensive deliverable that breaks down everything from how to use the member FDIC or the NCUA statement to fair housing compliance, such as where to use the equal housing lender logo, or even fair lending laws, such as where to include a link to your terms and conditions, and where does that link go to, and what type of text should that link include. This document typically has a table of contents for each different type of content that you have, and our law firm likes to prepare easy-to-follow checklists for every single type of content so that you know if you're going to promote a mortgage product or a credit card product, you know exactly where in your social media marketing compliance checklist to go to and what specific steps that your marketing department and compliance department can follow so that you can create compliant content time and time again. The second deliverable that you should consider are best practices for social media disclosures, meaning certain types of posts need legal disclosures or disclaimers, but there's often questions about when, where, and how to include those disclaimers. Should they be in text? Should they be in the image? Could they be in the metadata? Do you need all three? And how do I do this when I'm on Facebook or Instagram, where you can't put a link into the post, or on Twitter, where you only have 280 characters of text? Sometimes these questions can be confusing, but having a document that includes best practices for using these disclosures is really going to help. When we prepare these for our clients, we prepare visual examples of Facebook, Twitter, Instagram, or whatever platforms that our clients are using to show exactly when, where, and how to use disclaimers on social media. Next up is consumer questions and complaint guidelines. Look, your financial institution, I'm sure, has guidelines for how you handle complaints, but that might not address specifically how this applies on social media. And let's face it, social media is different. Questions or complaints can come in on many different platforms. It can come in during the day, at night, on the weekends, through a DM, through a comment, or in a mention within a tweet. And so it's really important for your marketing department or whoever is handling your social media to know what the processes and procedures are for timely responding to social media questions and complaints. When our law firm either updates or develops these for our clients, we like to include a bank of pre-approved responses for both positive, neutral, and negative feedback so that your social media manager or whoever is responding to these questions and complaints can have confidence that they can pull from these banks of pre-approved responses in each of these instances. And it also provides directions and instructions on how to escalate some of these complaints or questions to particular department heads, or what happens if this addresses a potential legal issue that you don't want somebody responding to on social media. Next up is something that we call targeted advertising guidelines, meaning if your bank or credit union boosts content or if it creates targeted ads to people who match specific types of demographics, then you must comply with laws such as the Equal Credit Opportunity Act, the Fair Housing Act, and fair lending laws. In other words, if you're using people's personal demographics like their age or their gender, you might potentially, accidentally, be violating the law when you're creating these types of targeted ads. But if you're using other things such as a location-based demographic or potentially somebody's interest, those are likely going to be allowed, but they have to be done in a safe way. So when we create targeted advertising guidelines for our clients, we like to break them down in a way that separates between high, moderate, and low risks, meaning there are more compliance steps and less flexibility for the marketing department when you're promoting high-risk content, such as loans or mortgages. And there's more flexibility for the marketing department to use these innovative tools when you're promoting things like the opening of a new branch or a community service initiative that you're doing, because that's not likely going to trigger much regulator scrutiny under those laws. So if your bank or credit union does use targeted advertising features on social media, then targeted advertising guidelines are a must-to-have as part of your social media risk management program. Next up, sweepstakes and giveaway guidelines. Your financial institution might want to run giveaways because, let's face it, they're awesome and people love to engage in these. But if you don't run them correctly, you can accidentally run an illegal lottery, and your compliance and legal department definitely don't want that. So these guidelines are put in place to cover a couple things. First, they're going to include best practices for how to run these online giveaways in a lawful way. They should also include a template for the terms and conditions, or official rules of the giveaways that are required under the law. And finally, your sweepstakes and giveaway guidelines should let your marketing and compliance department know what disclosures you need to do when you run one of these online giveaways and where to place these disclosures as well. This will ensure that you could be social and safe when running these innovative online giveaways. This is just a representative sample of the types of social media policies, procedures, and guidelines that your financial institution might need as part of its social media risk management program. But there are many more. For example, if your credit union or bank advertises on Google or Bing, you might need digital advertising guidelines to make sure your ads and your landing pages are correct. If you're running email marketing campaigns, you likely need to have canned spam guidelines to know how to run these email campaigns safely and effectively. If you're streaming on social media or running a podcast, we would likely recommend having podcast or streaming guidelines to know when and where you need to speak the different types of disclosures. If you're having someone as a guest on your social media, let's say a live or on your podcast, you likely also want to have a media release to make sure that you have permission to use people's names and likeness in your social media content. As you can see, there are tons of policies, procedures, and guidelines that might apply to your financial institution based upon your specific use, but hopefully the ones above give you a representative example of the key ones that we typically include within the social media risk management programs, policies, procedures for official advertising-related risks. Now, let's move to the second part of the risks, and that's reputational risks for your employees, meaning what types of policies are going to govern your employees' personal social media use to make sure that questions, comments, and complaints that are posted on their personal social media profiles are not going to put your financial institution at risk. First up is your employee social media use policy. If your bank or credit union has employees and they use social media at work or at their personal time, spoiler alert, that's all of you, then you need to have an employee social media use policy. This is typically an HR type policy that governs the do's and don'ts of using your personal social media profiles. It probably includes things such as don't share trade secrets or don't post defamatory things about members of the bank or the general public. Most financial institutions usually have one of these policies already in place, typically as part of their employee handbook. However, what we find at the social media law firm is oftentimes this policy was drafted many years ago and doesn't reflect the current practices for social media and the updates to employment law. So it's absolutely critical that you have an up-to-date and active employee social media use policy so that you could be proactive rather than reactive when it comes to addressing your employees' social media personal profiles and use. Next up are what we call employee advocacy guidelines. If your employees leave online reviews about your financial institution on Google or post positive things about your financial institution on social media, awesome. But they could be inadvertently violating the Federal Trade Commission's truth in advertising laws by not clearly and conspicuously disclosing that they work for your financial institution. Look, these really important laws have been growing a lot lately because people want to say nice things about your financial institution online, but if they don't know that they work for your company, then they are accidentally or inadvertently violating the law, and you can be responsible. So it's important to have employee advocacy guidelines that explains if you're going to leave an online review on Google or say nice things about us on social media, awesome, but you have to follow these guidelines that clearly and conspicuously disclose that you work for the financial institution. Having these will allow your employees the freedom to post reviews in a way that's safe, responsible, and legal. Third, you want to have social sharing guidelines for your employees. Look, your employees want to take the content that you post and share it on their personal profiles because they want to be advocates for you. But sometimes they modify that content or they create their own custom caption, or perhaps they're sharing job openings on their personal profiles, all of which could potentially create risk for your financial institution because what they're writing on their personal pages probably hasn't been run through and approved by compliance. By having social sharing guidelines, you can motivate your employees to share content in a way that is risk-free or responsibly manages that risk by having pre-approved captions or a process to run certain types of social media content through the appropriate types of channels. In this way, your employees can share content on their profiles in a way that are going to be the brand advocates that you want without creating unacceptable degrees of risk. Now let's shift gears to the third type of social media risk, and that is compliance risks from employees who are using their social media profiles to conduct bank or credit union business. This is going to be a mission critical type of risk that you need to cover if you have loan officers or other employees who might be using their LinkedIn profiles or WhatsApp to be engaging in bank or credit union business. Let me tell you the one type of guideline that you're going to need to stay safe. What you're going to need is something that we call line of business guidelines, meaning that if there are specific employees within a line of business, such as home loan officers, who have been approved by the bank or credit union to use their LinkedIn profile to conduct certain types of marketing activities, then there's going to be certain policies, guidelines, procedures, and training that are going to apply to these specific types of employees. In this way, you can figure out what bank or credit union social media policies and procedures are going to apply to the specific type of content that you are going to encourage these employees to share, so it can be done in a safe and responsible manner. By having line of business guidelines that might have a different appendix for home loan officers as it does for commercial loan officers, you can ultimately have a global set of guidelines that apply to any employee who is approved to use their profiles to conduct some sort of bank or credit union business, but also have specific addendums that only apply to one line of business or the other, so that you can capture, let's say, NMLS compliance for residential loan officers, which might not apply to commercial loan officers themselves. By having these set of guidelines and a training program for those type of employees, which we'll discuss soon, you're going to be able to manage the appropriate types of compliance risks for employees who use their personal profiles to conduct financial institution business. I told you there were a lot of policies and procedures there, but don't worry, that's going to be the largest part of your social media risk management program. What we just discussed was really a comprehensive but representative sample of the types of guidelines, policies, and procedures that your financial institution might need. What I highly recommend is doing a specific review of your financial institution's social media activities, and then identify what risks are involved, and from there determine which of those policies, procedures, and guidelines you'll need at your financial institution. Now, next up, let's talk about the third part of your social media risk management program, and that is social media training. See, the FFIC requires that all credit unions or banks that use social media maintain appropriate training. This could be training for all employees about their personal social media use, or it could be a training program for your social media governance team, like marketing and compliance. I'm going to break down the 2 or 3 types of training programs that your financial institution should have in place depending upon your unique social media activities. The first training program that any financial institution needs is an employee social media use training program. In other words, this program is going to train your employees from your CEO down to your newest hire about the do's and don'ts of your existing employee social media use policy that's likely contained within your employee handbook. This is usually a pre-recorded training program that's recorded once and delivered to new employees as part of onboarding, and also done once a year that's updated to make sure it captures any new updates to the law or any new social media guidelines, policies, and procedures that you may have. And this policy is really critical to be trained because it helps to be proactive rather than reactive, meaning having this training program and making sure everybody takes it is likely going to reduce the amount of social media risks that you can have. But it's also critical for enforcement. For example, a few years ago, there was a bank employee who posted some really defamatory things online about people who were marching for a hotly contested political issue. They said some pretty darn offensive things on their personal social media profiles, and this created a reputational risk for the bank. So the bank let the employee go based upon a violation of their employee social media policy that said not to make these offensive and defamatory statements. This employee ultimately sued the bank for employment discrimination, saying, "You can't stop me from saying things on my personal profile," and the court dismissed this bank employee's lawsuit based upon the fact that the bank had a lawful employee social media use policy in place, and there was evidence or records that this employee had been trained on the policy itself and should have known that those offensive statements were not going to be allowed, even if it had nothing to do with the bank itself. So your employee social media use program is absolutely one that you're going to need to have at your financial institution. The second training program that every financial institution really should have is your marketing compliance training. In other words, this is a live training program that's in today's day and age typically done through Zoom or WebEx or one of these other cool online platforms. That's delivered only to your social media governance team, meaning your marketing, compliance, legal, HR, and other employees who are involved in the process. This live training program goes over an overview of all the laws and risks that we talked about earlier, such as fair lending laws, the Fair Housing Act, the anti-discrimination laws, and how they're going to apply to your financial institution's social media use. The training program also is going to cover all of the different guidelines, policies, and procedures that make up your social media risk management program so that everyone knows exactly what tools you already have at your disposal to be able to manage these specific legal risks. Now, because this program is live, everyone on the training program gets to ask their own questions so that they can fully understand all of the important aspects of the social media risk management program. And best of all, this program can be recorded so that when new members of your social media governance team come into your financial institution, they can watch the program as well. And it really helps to support the documents, policies, and procedures in your social media risk management program so it makes sense for everybody. So this is a second program that we really recommend every financial institution has to meet the requirements of the FFIEC social media training requirement. The last training program is an optional one, and that's the line of business training program. Meaning, if your financial institution doesn't have employees who are authorized to use their personal social media profiles to conduct bank or credit union business, you don't need to have this program. But if you do have loan officers, for example, who are approved to use their personal social media profiles to promote the bank or drum up new business for your credit union or create those relationships, then you have to have guidelines in place, like we mentioned earlier, and you should have a second supplementary training program that can either be live or recorded for these employees. Typically speaking, a live program is better. It could be one that's done through Zoom and WebEx, as we discussed, because it gives these employees the ability to ask questions and truly understand why these guidelines are in place, which is not to stop them from being competitive in the marketplace, but to ensure that they don't accidentally or inadvertently put themselves, their customers, or your financial institution at risk. So those are the three types of training programs that you likely are going to need in order to be compliant with the FFIEC. The fourth part of the FFIEC social media risk management program is having processes in place to manage third-party risk. Look, your financial institution likely already has a vendor management process that's going to be compliant because you're hiring third parties all the time. Each time that your bank or credit union hires a PR agency, a marketing agency, a technology vendor, an independent contractor, even a social media law firm, you run us through the vendor management process to make sure that we're going to follow your procedures and guidelines and keep your customers and clients' data safe. But this is especially important when it comes to social media because these third parties are typically creating content or interacting with people online on your behalf. And you know that your financial institution could be responsible for what these people say and do on social media. So making sure that your vendor management process extends to these unique social media third parties is going to be a critical part of your social media risk management program. The fifth part of your social media risk management program is to have appropriate oversight and monitoring activities. Meaning, if you're responsible for having a social media profile, you need to be able to actively monitor your profiles for questions, inquiries, complaints, and concerns, and make sure that you have the right tools and processes in place to timely respond. This does not mean that your social media manager needs to be glued to their phone 24/7 to respond within minutes anytime a question or comment arises. But at the same time, it's not likely reasonable to go days or weeks without monitoring or actively responding to questions, comments, and complaints. By having these types of procedures in hand and by using tools or resources to be able to monitor your online profiles and actively respond, you're likely going to have a compliant part of your social media risk management program in place. The sixth part of your social media risk management program is preservation of your social media content. According to the FFIEC, the Community Reinvestment Act requires all banks to actively monitor and preserve questions and complaints about how they're meeting community credit needs and retain them for a 3-year period of time and put these questions and complaints into a public file. Because on social media, complaints can come in all shapes and sizes, in a tweet, on a comment to a post, on a comment on Instagram, or even through a direct message. It's critically important that banks preserve their social media content regularly and place those important communications in their CRA or Community Reinvestment Act's public file. It's also really important for credit unions to preserve their social media content as well. Oftentimes, people will make complaints about a credit union saying, I was advertised a particular loan, but then they didn't give it to me, or they didn't respond to my questions or complaints. And it's really hard to defend against those claims unless you have preserved your social media content. In that way, you can respond to any questions or complaints, whether it's legal, regulatory, or otherwise, with a copy of your preserved social media content, usually in a PDF or some other format that shows exactly what you advertised online or that you timely responded to questions and complaints. So preserving your social media content for a bank or a credit union is a really important part of the social media risk management process. The final part of your social media risk management program is senior management oversight. In other words, FFIEC requires that senior management is involved in the social media activities at your financial institution. They should be responsible for overseeing your marketing department to make sure that your specific use of social media advances the overall goals of your financial institution. Senior management is also responsible for overseeing your compliance and risk management activities as it relates to social media as well. In other words, regulators want to know that if your credit union or your bank is using social media, that senior management is involved in the process, that there's regular reporting between people who are managing social media and senior management to make sure that your financial institution's goals are always aligned. Those are the 7 required steps of a social media risk management program. So now that you know what they are, let's close this training program with a little bit of an overview of how to implement your financial institution's social media risk management program. If your financial institution already has a social media risk management program in place, your next step is to conduct what we call a social media risk assessment. The risk assessment is designed to review your existing policies, guidelines, procedures, and training programs to make sure that you have all of the required guidelines that would be in place to cover the specific risks of your financial institution. Your social media risk assessment should also take a look at the 7 steps that are required by the FFIEC to ensure that you have all of those specific steps in place. Once you've completed your risk assessment, your next step is to put a plan into action by saying what policies, procedures, and guidelines that you're going to implement and by when, and to put a timeline in place to complete your FFIEC compliant social media risk management program. And if your bank or credit union doesn't have a social media risk management program or is unsure whether your program is compliant, we'd be happy to help. At the Social Media Law Firm, we've helped hundreds of banks and credit unions understand and assess their social media risk and implemented solutions on how to manage it. We've created social media risk management programs for financial institutions big and small, sometimes in as little as 3 months, and to make sure it's tailored exactly to their specific needs, priorities, and concerns. Best of all, our law firm works on a fixed monthly retainer, so you'll know exactly how much it'll cost to put together a social media risk management program tailored to your financial institution and to get your marketing activities back online as soon as possible. Just shoot us a message or give us a call. We'd be happy to speak with you with a free consultation. For more legal tips, just follow the Social Media Law Firm on social media. You can find us on YouTube, Instagram, Facebook, or TikTok. We'd love to hear your questions or comments at any time. I really hope that you enjoyed the course, and it would be a pleasure to serve you and your financial institution at some point in the future. Have a great day.